Welcome traders to another Tick Mill trading update with me, Patrick Munley. Want to update the S&P 500 view using the emini futures contract and put together a trading plan for the session ahead. Obviously, a bloodbath yesterday in terms of the markets, vicious sell-off, but we did get a bounce from the support zone identified in yesterday's weekly plan from that 51.30 area. We traded as low as 51.18. But as I mentioned in yesterday's weekly update, the key when trading in these types of conditions is to reduce your size and widen your stops. So I would suggest under the current volatility using between a 20 and 25 point stop on any position and just reducing your size to volatility that we've been experiencing. Obviously, the VIX traded above 70 yesterday, which is historical and significant. So just keep that in mind in terms of your trading, and don't get don't certainly don't be sizing up in this type of environment. Going for a YOLO trade, it will ultimately end in tears. The VIX is still at elevated levels, suggesting wide swings are likely to be maintained. So let's take a look in terms of the data for the day ahead and where we stand from a catalyst perspective. Got US trade balance out this afternoon. I don't think we have any speakers, no Fed speakers today. So the focus is really going to be on the bond auctions. We've got a 3-year note in the US, 7 o'clock this evening, and that is likely to garner some attention in terms of where we are from a yield perspective at the moment. And then obviously we still have geopolitical tensions which remain front and center really. And if we do see a move by Iran against Israel, I would suggest that will be a catalyst for another leg to the downside. Might be short-lived, depending upon the nature of the retaliation, and depending upon how it's positioned from their perspective, whether or not it's a single event or an ongoing process. So we'll have to wait and see on that. But certainly that's is something you want to keep your eye on. And from a technical perspective, starting with the weekly chart, I just want to highlight this rectangular box that I have here is it's just a guide in terms of looking at previous significant sell-offs. We've already exceeded the last major corrective move from the 46.50 down to the 4,200. So the one I'm looking at now is the 2022 initial leg to the downside. You can see the characteristics, similarities that are in play at the moment. So this would suggest that we can trade down, like I said yesterday, in terms of the weekly target towards the 5,000 handle. And then from there, I think we might see a more sustainable bounce. Obviously, we have that turnaround Tuesday dynamic at play at the moment. We sold off Thursday, Friday, Monday. It's not unusual to see a bit of a bounce here as we head into the middle part of the week. What you want to be paying attention to is once we hit Thursday afternoon, Friday, that's when we may see another bear raid develop. And obviously, if we get any catalyst with respect to geopolitical tensions, then that could bring that move forward. So that's just something to bear in mind in terms of symmetry in the markets, which is something I track and is a useful tool in terms of gauging where we might be going on the downside. I certainly think at this stage we're not done on the downside. I think we've got at least another leg lower to my mind. Certainly, whilst we're trading within the daily descending trend channel now, below the 55.30s, it's a sell the rip type environment really. And so I'm anticipating that bounces will get sold into. Notably, in terms of the daily action, we had that first leg to the downside, we corrected, and we have traded into 100% extension and the 161 extension of this swing structure, which technically could complete a correction. Any new low would suggest that this move is actually impulsive and has further to go, and that would set up the test into the 5,000 level. Below there, levels to pay attention to are the 4860s, 4870s, which is the value area low on the weekly time frame, and into the weekly volatility bands as well, the uh, VWAP bands. So those are some levels to just have marked up in case we do start to materially break down to the downside. So let's pull this together in terms of today. Here you can just see my current positioning and stops. Uh, what I'm looking for, as I highlighted yesterday in the weekly plan, was this 51.30 test, and then it bounced up into the 53.20 to 53.30. Didn't get quite as high as that, but once we failed to test into that area, I took a short against the 52.90s. So for today, the bull bear zone for me is going to be the 53.05, 53.15 area. As we trade below there, I'm looking for a move down into retest this 51.92 to 52.04 areas potential support to set up a three-wave move. So you can see here that this first move off the lows, now we're pulling back. So this three-wave move then could target the 53.20s to 53, the 53.27 area to the 53.38 area, which is the weekly bull bear zone. And that's where I'm going to be paying really close attention to. It's obviously the midpoint of descending trend channel as well. And I would anticipate from there we could see sellers step back in and try and take this lower to target the 5,000 level. At this stage, on a intraday basis, it would take a close back through the 53.20 to suggest that we have further to go in terms of the corrective upside. Next upside objective then will be into the 53.77 to 53.89 area. Once again, key test there, as that could be another zone where we see sellers emerge and try and make another leg to the downside. So for now, we've got an impulsive move to the downside. We're looking at corrective price action, a bit of sideways here, and we have our key levels in terms of resistance and support. If we take out yesterday's swing low through the 51.20s, then the next downside objective is going to be the 5100 to 5090 area. Now from there, again, playing it tactically, if you're at the screens, then I'd be watching for any intraday divergences into that area as an opportunity to play for another near-term bounce. I think we're in an environment where if you are an active trader, then there is a lot of opportunity to play both sides of the market. But for now, the regime is sell rallies. As always, traders, plan the trade, trade the plan, and most importantly, manage your risk. Until next time, thanks very much.